Welcome to ISE's Equity Index Weekly Outlook, a weekly outlook on ISE and other industry indexes, hosted by Patrick Ceresna, a derivative market specialist and investment manager with extensive expertise in options and the broader derivative markets. ISE trades options on more than 15 proprietary sector indexes, as well as broad-based indexes and a variety of licensed benchmarks. ISE continually enhances its trading systems and develops new index options products to provide investors with the best marketplace and investment tools to trade smarter.
Hello and welcome to the ISE Equity Index Outlook for August 9th, 2010. This is Patrick Ceresna. As always, we start off with the S&P 500 using that SPDR exchange traded fund symbol SPY. We tightened our upper focal point on the upside by 1 point and down to the 113, 114 area, as that's where the rejection came off of the jobs numbers and subsequent reversal on the downside. What is particularly interesting is Friday's job numbers came out relatively negative, causing an immediate sell-off. But the sell-off actually held the support lines that we were talking about on an intra-week basis down in the 1100 to 1105 area on the major S&P, which is around the 110 to 111 area on the spiders. At this stage, it would take a technical breakdown below this blue box in order for us to actually have conviction that there's a bigger picture sell-off actually underway. On Tuesday comes out the Fed minutes as well as the Fed funds rate, and that could in fact be what the market's waiting for to make its major move. But we are not going to be bearish until a breakdown of this 110 area on the spiders. And if we do get that, then we will be looking for a bigger picture consolidation that we'd be expecting to retest the previous lows, if not go to a lower low in the marketplace. But until that level is broken, then the trend is still higher, which means that a swing higher come Monday and Tuesday could actually even have us retest that 113, 114 area, and we have some measured moves that will measure even as high as the 115 to 115.50 on the upside. So there is still room for there to be one more push higher, but we are in the bigger picture expecting there to be some sort of a summer high more than likely put in this area, which could have the market go through a corrective pattern into the latter part of August and early September. But let's first just see where the top actually comes in. Next here, I want to take a look at the ISE US Regional Banks Index, which is a symbol JLO. Last few weeks we had the 25, 25.50 area on the upside as a focal point. We tightened that down to the 24.50 to 25, as it's clear that there's a significant overhead resistance in the bottom end of that zone that we were looking at. So really at this stage, we were looking for the bulls to see whether or not they have the conviction to be able to take the market somewhere above this 25 level on the upside to break it out on there. But so long as the regional banks continue to trade in this sideways kind of coiling formation, any technical breakdowns, particularly below the 22 level on the downside, open the window for even a sell-off that, if given the right catalyst, could go down to the $18 to $19 range. Now, we're not necessarily anticipating that yet, but we certainly are not seeing any bullish follow-through from the bulls' perspective here. Next here, I want to take a look at the ISE Syndex, which is the symbol SIN. This is an index of all the casino, tobacco, and distiller companies. More or less, almost all the rally attempts have now been contained to this 114, 115 area. Two legitimate tests into that zone and reversals off that downside. This is right at the top end of a retracement zone. This is pretty much following suit with the S&P 500. So if we see the S&P 500 put in its highs somewhere where it is, then it's very unlikely that the Syndex will have the momentum to be able to make a legitimate push on the upside here. So if we see the whole market topping out here, then the Syndex should somewhere in this zone here put in its some short-term and intermediate highs that will swing the market lower. Next year, I want to take a look at the ISE Home Builders Index, which is a symbol RUF. And here we crunched the whole chart a little bit more narrow so that you guys can see how shallow of a flag this entire pattern has been in here during this entire counter rally on the S&P and a number of the other indices. The Home Builders Index and the home builders as a whole have not participated during those moves. And so really at this juncture, We're seeing a lot more of the this kind of sideways consolidating markets. If the whole market creates a summer high and has weakness going into September, October, like we can continue to anticipate, then this shallow flag will technically break down, and we could see moves down towards the $7, $6, and even $5 levels on the Home Builders Index. In order for it to get down to that $6 and $5 target, would have to take a really big fundamental underlier for it to see that kind of a significant breakdown. But if there is no major catalyst within there for that breakdown, then we would expect a $7 area to contain any sell-off. So we're just going to have an initial downside target if this rolls over, and then subsequently if we see again that news coming out that is driving more aggressive selling in the sector, we would target those lower numbers. Next year, I want to take a look at the ISE Natural Gas Index, which is symbol FUM, and more or less we continue to see a lot of bearish price action developing in the natural gas index. Even though it's been working its way higher very gradually, we recognize the fact that there was some very aggressive selling, and now we're seeing a flagging or wedging formation working its way higher. There's no technical evidence of a reversal yet, but this 99 to 102 area more or less is the home of the retracement zone. And so if we see any major reversals of the natural gas index from within this box, that would only solidify or confirm the fact that there's new waves of selling coming in the natural gas index. The only way that the bulls can neutralize this pattern is to create an upside breakout above 102 that immediately can retest up into the 106 to 108 area. If we do, then we can start to look at any sell-off being more of a neutral, sideways, range-bound market rather than a bearish one. But if we reverse off this level, expecting a move that could potentially go as deep as the 80 to 82 level on the downside becomes a realistic downside target. Next here, I want to take a look at the ISE Mini FTSE 100 Index, which is the symbol UKX. Here, the UK market has had quite a strong bounce back off of some very aggressive selling during that crisis period in May and June. Overall, we're creating a rising wedge formation, finding overhead resistance in this 540, 550 area, right where we had our second upside target. At this juncture, we are going to be watching whether or not we see a lot of topping formations develop in here. If we do, then anything that breaks down below this 520, 525 area on the downside would confirm to us that the FTSE is beginning a corrective or a selling trend after this extended 1 month run higher. At this point, if we see any technical breakdowns below there, our first downside target on a breakdown of the 520 area would be back down to 480 to 490. If in the bigger picture we go out into September, October, and we see very aggressive selling into that cycle, the actual downside target for the FTSE would be all the way down in the 440 to 460 area. Now again, that would not be a short-term forecast. That's more intermediate going into the fall. So first, we just want to get a technical signal to indicate that selling is coming in, and that would be below that 520 level. That was your ISE Equity Index Outlook. Thank you for joining me.
Thank you for participating in this week's session. Please join us again next week. For more information about Patrick Ceresna and to sign up for free index options trade alerts, visit www.optionsource.net. To learn more about ISE index options, visit us at www.ise.com/indexoptions.